Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is a series where we analyze Nifty on multiple time frames daily post the market so that we are ready to tackle the volatility the next day with much more confidence and clarity. Right. So in case if you guys like the way I put out price action concepts as well as Nifty trade plans, please do not forget to like the video, subscribe to the channel, share it with the trading friends and community, and also put down anything that you might have to say in the comments box, be it feedback or criticism. I am open to both. On that note, we'll start with today's video, and first we'll analyze what we had planned for today versus how did it transpire in the market, how did we play it, and then I will move on to the second part of the video, which is planning for the next day. Today, I believe, in case if anyone has not watched the RSI video on how I look at RSI and how I use RSI in my trading, that's the only indicator that has forever been constantly been there on my charts. Please go and watch that video right now. I am sure that will add immense value to your learning. Today's trades had two important lessons from the RSI concepts that I use. So I will be explaining them as well. But in case if anybody has not watched the video, please go and watch that right now. So today our plan was to create a long position above this and a short position only below this particular low with a pullback. Now, markets opened with a big gap down of around 172 points. Yeah, if I'm not wrong. On the news of US bombing the nuclear sites in Iran over the weekend. Now, this is something which was highly anticipated. Indian markets, for a very strange reason, has a knack of reacting to every global uh, thing which is happening. So Israel is in war. The stock market is being attacked by Iran, but still the market is at all-time high, is not reacting in such a way, whereas Indian market, for some strange reason, reacts to every global news, whether it directly or indirectly impacts it. Uh, so yeah, we were prepared for the gap down opening. Now, although my video was uploaded on Sunday morning, but it was recorded on Friday itself. So that is the reason it does not factor in the of the gap with the gap down which was expected. Otherwise, I would have clearly mentioned that in the video as well. But nonetheless, we should not predict anything, but be prepared for anything is my mantra. And markets opened with the gap down. Now, because this was a gap down based on the uh, news of war, wherein the US had attacked or targeted the nuclear establishments in Iran. It was not directly impacting India. Plus, any news which had come down with regards to the with regards to Iran actually closing a particular strait, which is a key strait which is used for major global oil exports and oil transportation. And that impacting India again, that was clarified by person from the government ministry that India is well prepared and very low amount of oil is being transported using that particular strait, and we will not be too harshly impacted because of this particular decision of Iran. So I believe that is the reason enough to believe that okay, right now this might not after a gap down immediately we should not short the markets, but market went into a sell-off mode, gave us a closing below the zone below which we were short, gave us a pullback. My first trade of the day was around here, wherein I shorted at the low of this particular red candle, the 930 candle. As soon as the low was taken out, because this was the pullback that we had got, the SL was right around here. It moved some points in my favor and then reversed. I got out cost to cost around the closing of this candle. Now comes the important part of RSI. Why did I decide to exit it here and not wait for my SL to trigger? I have clearly mentioned to you guys how to use RSI divergence, not for just creating a position, but in case if you are in a position and you see RSI positive or negative direction based on the kind of position that you are in, you can plan your exit from the trade as well. And that is exactly what happened here. As you can see, market made constant new lows on a 5 minute time frame, whereas RSI made a new higher low, which is a positive divergence, means market can go up from here. And in case if you are in a short position, you should exit your trade and try to book your position or get out cost to cost. I got out with minor profits, very, very minor profits. And that also I credit to the high VIX that was today in the markets. In case of any low VIX or just around standard wicks, the profit would also not have been. Then might be I would have to had closed the position in a minor loss. But this is what exactly happened here. Now I did not participate in this particular long rally or the move which market gave. The reason was I cannot directly enter into a long round. I need a pullback. The pullback came in much later, but it was a very shallow pullback, and I do not consider this safe enough. But nonetheless, market actually did go up again. Now, this was a trend line which I had drawn, and market upon the breakdown of this trend line, I was again looking at a shorting opportunity below this with a pullback. The pullback did come, but the markets never went back below this. Now, this is another trade. Again, this was a trend line which I had drawn in the live markets, and I was waiting for markets to either break down below this and go below this for a short entry, or go up above this, give me a pullback, and go up again with for a long entry. But market went up in a momentum ways without giving us any pullback. I had also switched to the lower time frame on a 1 minute time frame, and you can see post this particular breakout, there was hardly any pullback even on a 1 minute time frame, right? So again, I will not compromise on my setup or on my set of rules just to make an entry. And I'll be very frank and clear with you. I did miss this particular move, and that is the cost that I'm willing to pay in order to safeguard my capital in the longer run. Now, the third trade of the day came here, wherein I had shorted the market around 210, around this particular low. Now, again, here, the reason was RSI. Number one reason was RSI. Market formed a double top around here. The market, while market created a new high, RSI created a lower high, right? Which is a negative divergence, followed by the double top confirmation. Plus, there was one more confirmation, which was that the market, although tried to fill the gap, but it could not completely fill the gap. Now, there is a theory around this, but that whenever a market tries to go and fill a gap and reverses midway or somewhere in between without filling the gap completely, that is known as a, pivot gap explosion, and that can lead to a move in the opposite direction of gap filling in a good way. And so that is the reason I entered around here, shorted around here with a SL around here. A market also till, and I held it till around 3 p.m. It was in a good gain. And these were the only two trades that I took, and both of them involved RSI. For the first trade, the exit involved RSI. For the second trade, the entry involved RSI. So I believe the video that I made on RSI was made at a very right and opportune time with plenty of live examples that I can explain to you guys so that you also can understand and look at that concept that I tried to explain in that video on RSI. That is something which I have been keenly and very vividly using. So I hope you guys will be able to incorporate RSI in your trading, and that will also be helping you. Right now, for tomorrow, we'll just be deleting this particular high. We'll be deleting this zone as well because this was the 0.5 to 0.618 of this entire zone, which has already been retraced, and market has actually made an inside bar. So if anybody had watched the video for today's trade plan, 23rd, I had clearly mentioned that I'm expecting a day which will be inside this particular green candle and a sideways day. And if you look at the chart on a daily time frame, it's a clear-cut doji, which is a sign of indecisiveness or a sideways day. And we are still between the bigger range that we were already stuck in. And see, right now, what I'm expecting is maybe the opening gets a lot impacted by the overnight news, which is happening. Anything can happen. All the countries are free to do whatever they want. And Indian market, as I said in the start of the video, is very keen on reacting to everything. So we'll be prepared for it nonetheless. But for tomorrow, because it's a doji, we'll keep the plan of action very simple. We have a long entry above this high. For shorts, we will plan an entry below this low. Please keep this the entire range of doji as a no trading zone. I know this is a big range, but nonetheless, if market opens with flat to little gap up and then gives us a closing above this high, and then with a pullback, we can trade a long trade in case of a gap down. If we go below this and we get a pullback, we can create a short entry. But in case if market opens flat and does some time pass around here, please not get tried because most of the time, I believe you will be facing a trap scenario where you can feel trapped in a position on whichever side you are taking that particular trade on. So just let me also look at the markets on a little bit higher time frame. We are already in a sideways range only. There's nothing which is being done. So the only high probable trade that I can look for tomorrow is that market opens with a bit of a gap up, and then we go up above this particular high, and with a pullback, we can create a long entry. And in case of a trending move, and if we move up above this particular zone and the market sustains, we will be looking at adding quantities to our trade here. So yeah, that's it from my side for today. This will be the brief and crisp plan for tomorrow. I hope you guys have a good trading day, and thanks for tuning in. This is your Nifty Guy signing off. Do not forget to like, subscribe, and comment on the video. And in case if anybody has not watched the video on RSI, please do go ahead and watch it right now. It's very resourceful and has got a lot of new information that might help you guys. So that's it from my side for today. This is your Nifty Guy signing off. Cheers and have a good day ahead. Thank you.